Okay, so welcome to this session today. So I think I have duplicate screen. Let me just close that. Okay, yes. Can you see my screen?
Yes.
Not sure I'm sharing it. Let me share.
Okay, I'm only seeing, okay, yeah, I'm seeing your screen now.
Awesome, awesome. So welcome to today's session on SAP S4HANA tax finance taxes. It's a very important session and a very important module in finance. And today we're going to be learning, as our structure is, I'll take time to explain, the basics of taxation in SAP. And then we'll play one of the sessions just to give you that feel on, how to do the configuration. And I'll also provide the videos so that you can try that on your own. But today, let's look at just understanding the basics of taxation in SAP S4HANA. And then we will also, like I said, we'll play one of those recordings. Then, within 30, 45 minutes, share the other one so that you can now take your time and do the practice when you have the time at home. All right, so let's learn the basics and then look at the configuration in the next videos. Now, this is understanding SAP S/4HANA Finance taxes. And of course, taxes sits in two important modules in finance, which is AP and AR. You can't find tax any other place outside AP and AR. And that's why, and of course, AP is accounts payable, which is the module that manages everything about your relationship with your vendors and suppliers. And AR is accounts receivable, which you use to manage relationship with your customers end to end. And my name is Kelechi Kelly Adida, and I'll be taking you through this session. Now, let's look at taxes, in SAP. Now, SAP S/4HANA Finance can be used to manage all types of taxes according to, your region and country requirements. Now, in, it's a sub-module of financial accounting. Um, in sub-modules of financial accounting, various tax functions can be utilized, which includes tax calculations, tax postings, adjustments, and of course, tax reporting. These are the core functionality of the tax module in finance. It's used for number one, just a minute, let me get my pen so that I can explain a little bit more further. So you get the context. Okay, so we have looked at um, three major things. One is tax calculation, tax posting, tax adjustment, and tax reporting. So these are the core functionality of the tax module in finance. Of course, we also have the tax master data and the configuration elements for taxation. And let's look at the tax functionality. And to do this, let me open my stuff to just give us some background details. Just a second, please. Just a minute. Sorry, trying to get the slide. Okay, so we are here now. The next we're going to look at is the tax functionality, which is very important. By functionality, we mean, so let me give a scenario and then we'll look at the functionality. So this is a business, and of course, we know when we hear the word tax, Um, what comes to your mind, Mr. Mike, when you hear the word tax or taxation? What comes to your mind? Or what is it?
What comes to my mind in tax is a charge that comes from the profits of an undertaking or from an
Okay,
invoice that has been given, that an invoice, the tax is subject to a good that is being, a good or services that is being received by a consumer.
okay, okay. That makes sense. Now, taxation is one thing that comes to your mind is it's tied to government.
Hmm.
That's the first thing. There is somebody, of course, those we call the tax authorities. That means that taxation is a burden that is put on business or individuals, to commit to certain regulations that has been issued by government. Second thing that comes to your mind when it comes to taxation is goods and services. Um, the article that is being taxed. So another thing that comes to your mind is okay. When I hear taxation, I know it's related to, services that has been rendered or a goods that has been supplied. Another thing that comes to your mind is business or individuals. That means also that tax is a burden that falls on businesses. So if you're doing business in wherever country you're doing business in, there is a legal requirement of that business to remit some of its revenues to government. And also as individuals, there are personal income taxes or taxes that is required for you to pay. Maybe if you're a salary earner, you actually asked to pay a certain amount of your revenue or your salary to government. That's also the concept of taxation. And also another thing that comes to your mind when you hear taxation is rates. So every tax has rates. Rate is like a percentage of what you should be paying from the revenue that has been earned. And government is responsible. Government at federal level, at state level, at county level are responsible for putting laws to state what rates that will be paid in, for taxes. Another thing that also comes to your mind is since you know the rate is, I'd say, um, compliance. By compliance, I can also say reporting. Is that at the end of the day, when you pay these taxes that has been this, that's a legal regulation. It's important that when you pay, you're complying. If you don't pay, it means you have not complied. Another thing is reporting. How do you report that you have made certain payments for certain kind of taxes? Not just the government keeping its record, but business are supposed to also keep records of taxes that has been paid to the government. And I think if there's any other thing, I think another thing that is also important is um let me think now, is uh types of taxes. Types of taxes. So we have said that tax is a burden, it's a legal requirement. For example, let's focus on business. Um, but the question is, what kind of taxes or what kind of law, what kind of taxes are expect that what kind of taxes are go businesses expected to pay or expected to comply with? The very most important of them is called VAT. Another one is called
Withholding
withholding
tax.
tax. Another one you can call it custom levies. So VAT is called value added tax. It's a tax, it's a burden on the goods or services that are being sold or that are being procured. WHT is called withholding taxes. It's a tax on services from vendors. It's basically on purchases, not on sales. So when you're purchasing certain services on vendors, the government would require you to withhold that tax on their behalf. and remit to the government, and then at the end of the day you get some kind of tax credit. It depends. This
Credits.
this basically it relies on, this is country specific now. I know there are some countries that do not have withholding taxes. Some countries have withholding taxes. So taxation is heavily country and region specific. That's why I said in the first example of when we look at taxation, we said that all taxes, you know, in financial account in SAP, in SAP financial accounting can be used to manage all taxes according to region and country requirements. So every region and country has requirements on what kind of taxes to pay, what are the rates, who is supposed to collect them. In terms of authorities, you have authorities in the federal level, you have state level, and sometimes you have local government level, you know. But the most important thing here to note is you need to understand the tax requirements for your country and for your region. He's just giving some background on the concept of taxation. And of course, the last but not the least, GL. At the end of the day, for you to effectively report or record taxes, they need to be linked to your financial GL. So when you are applying it to invoices, you know, the GLs keep record of those taxes that has been paid or incurred. I hope that is well understood. Now, in terms of functionality, we look at different functions, within, we have said that taxation sits within the FI, AP, and AR module. One of the functionalities, as we just explained, is, so let's see functionality. One of the functionality is tax calculation. Now, and this is functionality in SAP. And of course, in terms of tax calculation, SAP calculates tax amount with or without, whether there are discounts or not on the tax base. So SAP does, so for example, if we say VAT is 5% on invoice, when you set up the configuration, SAP would calculate this 5% on the base amount. So if the total invoice is, for example, 50,000, that means SAP does 5% of 50,000, and it drops that as your taxable amount. And that is what you expected to remit to the government. Another thing about functionality is tax codes. So for you to successfully apportion, calculate tax for invoices, you need to set up tax codes. Now, tax codes are important because it is a code you can use to apply to the invoice, and codes have rates. So for example, if we say a particular code is V1, and V1 means input tax, which we also call VAT. This is a tax code, and within that tax code, we have the rates. So a tax code has a rate of 5%. So when you have a code, inside that code, you have a rate. So a code, like I've said, can be V1, and the rate is 5%. So one of the functionalities is to set up that tax code. And of course, within the tax code, you have the tax rate. And when you apply a code to an invoice, automatically the rate is applied to that invoice. And that is also one functionality you need to know about taxation in SAP S/4HANA. The second functionality, which I'm going to explain, is the functionality of tax postings. Tax postings. Now, in SAP, the system posts the tax amount to a defined tax account. So for tax postings, you need a tax account. And tax accounts fall under GL. So you need to create a GL account. For those who are not accountants who are listening to me, GL accounts are accounts that are used to keep record of the taxes that has been paid. So ideally, if I have spent, if I apply a tax rate of 5% to an invoice, the question is when the system calculates 5%, let's say 5% here is 2.5, where does this 2.5 go to, and how am I able to know if I've done calculated this tax for 50 invoices? How am I supposed to know, where am I supposed to get the record of all these taxes that has been applied to 50 invoices? You can find that in your tax ledgers, so or what we call tax accounts. So again, tax accounts are mapped to tax codes, and tax rates are mapped to your GLs. So that when you apply the rate to an invoice and the system calculates the 5%, it will post that 5% to a ledger. So that when you go and do your reporting for ledgers, you can run report for that tax account, and it will show you all the deductions that has been made, or all the tax that has been calculated for each of those invoices. So that's another functionality you need to also keep in mind, is tax postings. And for you to do a tax post, you need to define a GL account. And also there is adjustments. The system corrects tax amount in cases where you have discounts and other deductions. So outside GL, you also have adjustments. So adjustments can be triggered by cash discounts, for example, on the invoice. You can also have deductions. So all these affect the tax rate. So they affect the tax rate. So what the system does is when you have adjustments is to also adjust, the rates, because the tax is on the base. Anything that affects the base affects the amount of the tax that will be calculated, and the system needs to do an adjustment to be able to get that correct. And that is also part of the functionality we have in taxes in SAP S/4HANA. The third is tax reporting. Of course, you can use the system to create your tax returns and run your tax reports. At the end of a period, you should be able to see what we call input tax and your output tax. Input tax is tax on your VAT, which is sales. Sorry, input tax is the tax. So let me correct this. Sorry, because this is something that I need to explain very well. So when you hear the word inputs and outputs, it's simple. The best way to relate to this is a business. Input mean a tax that is generated as a result of something that is coming in to the business. And what comes into the business? What triggers input into the business? Let's say when an invoice is coming into the business, that's when you apply input tax. So what will create the scenario for an invoice to come into the business is purchases.
Purchases.
Yes, and it's tied to suppliers. So whenever you receive invoices from suppliers and they have VAT on those invoices, that VAT that you pay is called your input VAT. However, when the business sends invoices out, that's why it's called output, to customers. So the only time invoices leave the business is when they are sending out those invoices to customers. And of course, since it's going out, it's called output tax, and we're expected to deduct that tax and remit to the government. So the difference between the output tax and the input tax is your tax liability, it's your VAT liability. Because input is what came in minus output, what left. The difference is the VAT you're supposed to remit to the government. Now, this is not a global requirement. This is just based on country specific. Taxation is heavy on government policies, on politics, and on laws that are specific to different countries. I'm probably referring to this definition is linked to one of the tax areas I know, which is also in Nigeria. So, but the general idea is that your input tax, which is tax that came in, and your output tax, which is tax that left, the difference is your tax liability. So basically, this is the basic thing you need to understand about the tax functionality in SAP S/4HANA. Let's look at the next thing we have. Now we're going to look at integration and document entry. Um, Now, in terms of, you know, in terms of integration, which is what I'll pick first, the question is what triggers taxation? What, in terms of integration, especially within SAP S/4HANA, the question is, how does tax happen? How is tax triggers, and what systems are integrated to enforce that trigger of taxation in SAP? Now, first is taxes can be posted through a module we call which is materials management. And by we mean business transactions like PO, PRO, um, invoice, goods receipts, invoice verification. So one of the ways taxes can be posted and that can trigger the tax engine is through invoice verification in And of course, another way that can trigger taxation is through um, vendor finance invoice, so FI invoice. And in FI invoice, we have vendor invoices. Now, these vendor invoices is not linked to our procure to pay process. There are invoices, for example, if you procure spare parts or procure some kind of not spare parts, sorry, if you procure scraps or you procure certain you know or you procure certain expenses that are taxable but did not necessarily go through the procure to pay process, then that's one trigger for taxation. So those are the two ways taxes can be triggered in SAP S/4HANA. However, before these postings happen, the tax configuration must have been done and tax requirements assigned to the master data, that's the business partner of vendors and customers, and of course GL. So before you can successfully run integrations or before tax are triggered, you must make sure that you set up your tax configuration, and of course you assign those tax codes or tax codes to your customer and vendor master data. We'll see that when we go through the video session. Now, another thing is picking tax code at document entry. Of course, when you generate, also when we go through the video session, you will see how you call out your taxes. Let me see if I can show you one briefly here. Okay, so for example, if I go to a transaction we call FB70 and I put my company code. Now you see here we have you see tax. So you see that um here you can see taxation as a pin. Let me just I don't want to call it out. Let me just do something very briefly. I don't have customers, I believe. Yeah, so let me do FB60. FB60. Yeah, so this is what I'm talking about. So you can see that this is where you call out taxes to apply on a typical vendor invoice in FI. So immediately this, if the VAT
Mm.
is created, once the VAT is created, you're able to apply it, and of course it applies to the invoice. But you will learn that in detail when you have access to the video session. So what I'm trying to say is that, another way you can, the document entry for taxation is when you go to certain documents, you will see the tax drop down or icon or the box. You're supposed to tick, and of course, click the drop down and select the tax that should apply to that invoice. All that you will learn as you go on. The next thing we are going to look at is the futures of VAT. VAT is one of the very important type of taxes that we're going to, sorry, probably the most popular of them. So let's probably just talk about VAT. I know I've explained a little bit about it, but let's go a little bit deep dive into it. Now this in now SAP system supports, different types of taxes. Like I've said, one of them is VAT and the other is withholding tax. VAT is what we call VAT is value added tax. That's when you add value to a certain service or item, you're expected to charge this tax. It's also what we call a tax on sales and purchases. So when you purchase stuff or you sell stuff, um, when you taxes on sales and purchases are levied on, every sales transaction, in line with, like I said, the laws of the land. And also when you procure things from suppliers, VAT applies. Now, this is this is what we have. We have broken this down to our sales goes to output tax, purchases go to input tax. And input tax is calculating using the net invoice amount, and is charged by the vendor. Output tax is calculated using the net price of the products or service and is charged to the customers. We have explained that. So companies can offset, input tax against output tax and paying the balance to the tax authorities. And of course, tax authorities can set a non-deductible portion of the input tax which cannot be claimed, which then can be claimed from the tax authorities. So you can claim some of your VAT back, in certain cases. So this is basically one of the very important taxes that is in SAP, and I've taken some time to explain this a lot. The next is withholding tax, which is also very, very important. Now, withholding tax, the popular name is called WHT, and withholding tax is not another form of tax. It's not like VAT. Rather, it's an advance payment of income tax on specific transactions. So it's not like, VAT that is, well specified and is tied to goods and services. No, withholding tax is another form of tax. It's not another form of tax. It's not like a core tax. It's not core taxation. Rather, it's just an advance payment you're making for taxes you're expected to pay to the government in income taxes you're expected to pay to the government in future. Let me break it down. Um, Companies at the end of every period pay what we call income tax. That is, they pay taxes um, from their net, profits,
Their
or
profits.
revenue.
Mm.
Yeah, revenue
Mm.
for a particular period, and every country has rates that they apply. I think in Nigeria, it's 30% of your chargeable profit or something like that. Now, what withholding tax is saying is, let's say for example, your company income tax for 2026 should have been, let's say, $500,000. Dollars. This is we're expecting is we are just assuming that your company income tax is 500,000. When you do withholding taxes, you withhold taxes and remit on behalf of the government. When you're doing this, um, you have what we call a withholding tax credit. So when you do this, you are, like we said, is it's an advance payment for, so you're already paying part of your tax, your company income tax as you're doing this. You're already, accumulating some credits. At the end of the day, if your credits, your withholding tax credit is, let's say, $10,000, £10,000, $10,000 in the year 2026, and your company income tax is 500,000, what you finally remit, the company income tax you remit to your government is 500,000 minus the 10,000, which is your withholding tax credit, which is of course 490,000. So you see that withholding tax is an advance payment of your income tax, but at the end of the day, when you finally know what your income tax is, you remove your withholding tax credit and remit the rest to government. So generally, when such
Exactly.
transactions are executed, the person or the company making payments is required by law to deduct withholding tax at a specific rate, depending on the type of transactions and the party involved. For example, in Nigeria, royalties, if you're doing any business that has royalties, for companies, you're expected to charge 10%. For individuals, I think is 5%. Um, if I remember, for management fees, if you are, if you're procuring a service and there are management fees involved, withholding tax for that management fee is 10% for companies, and of course 5% for individuals. For consultancy, commission fees and all of that, withholding tax you're expected to deduct is 10% and 5%. So if you are as a company, let me explain this. So this is company ABC, and this is a supplier. And the supplier offered a consulting services to you, and this consulting services was $30,000. What withholding tax says is when you, and of course he will put invoice of 30,000. When you're paying this vendor, um, you know, if you're expected to pay this vendor, you are expected to charge 10% as withholding tax. So the invoice will be like this. If the invoice value is 30,000, then you're going to charge withholding tax 10%, which is 3,000. And finally, what you're going to pay this vendor is 27,000. Now, what happened to this 3,000? Of course, it's mapped to a GL, and you're expected to remit this 3,000 to the government. Now, government will give you a credit note, which you of 3,000, which we use to reduce your tax liability. So this is the concept of withholding taxes, depending on the country and the regulations. So that's another tax that is being managed by SAP. And of course, let's wrap up because I think we're almost done. So we go into the system. You can see the withholding tax process flow. You have goods and services. Um, the vendor is subject to tax when the customer is authorized to deduct. So, like I just explained now, the vendor offered the service to us. We, as the receiving end, we deduct the tax and remit that money back down here to the government. And the tax authority gives us a credit note that we use to reduce our tax liability. In SAP S/4HANA, these are the core tax functionality we need to configure and set up. We need to set up taxes at country level. We need to work on the calculation procedures, which is called the tax type. We need to set up tax codes. We need to do the tax account determination, which is the DL accounts that will map to the tax codes. And of course, we need to pick the tax code when we are raising an invoice, or we're doing an invoice verification, or we're posting an invoice document. So thank you very much for listening in. I don't know if you have any questions at this point. The next step will be to go to the system and use the first 15
No, there's no
minutes or so
question.
to. Okay, awesome. Okay, so let's end this session at this point, and let's look at um, a task configuration before we move on. So I'll play a pre-recorded session. Let's go to the um, task configuration. This will play for some minutes. Please, did you listen? Did you get anything? No? Did you hear any recording sound? Can you hear me, Mike? Hello, Mike. Can you hear me?
Yes, I'm hearing you.
Okay, so I'm playing the. Please let me know if you can hear the sound. Go to procure. When you go to buy things, do you hear the sound? Hello, Mike. Did you hear the sound? Mike, are you there?
I'm here.
Let's say you go to an eatery.
Hello, I'm here.
There is always this VAT. There's one popular tax they call VAT that is always assigned to an invoice that normally should be remitted to the government. So government has come up with a policy that when you're when you're um, when you're selling goods or services, it's a regulation that you need to withhold. You need to put an extra charge on that thing you're selling, and that charge is called value added tax. And although the seller will put that.
Hello, are you there?